right, so welcome to Game Plan Sunday. Today is December 5th, 2021. Here with the crew, taking a look at what occurred over the past week. And then we'll take a look at what's coming down the pipeline this weekend, see what we can do with all this information to strategize and make some money in the markets coming up. Now, starting off to December, we're off to a pretty red start, but doesn't mean that that's the way it's going to end. But if we take a look back, just going back here to what occurred over the past week in the review section here, you guys can see we had a lot of red in here. All right. So let's go ahead and tackle that, where we're looking at, if you see the dollar was where the strength was at. Okay. Now, typically when we plan the dollar go up, stocks go down. So the dollar was up, but everything else is red. You know, under that, gold was slightly down. The Dow was slightly down. S&P 500 was down 1.22. Bitcoin down 1.38, and I think they're taking some L's right now. They're trading under 50,000 right now. You guys know Bitcoin. You got to have a good stomach to deal with that one. So it's going to take you for a wild ride. The NASDAQ was down negative 2.62%. Oil was down negative 2.86%. I want to take a look at those charts as well. The Russell was down negative 3.86%. We definitely want to make sure we pay attention to the Russell, as the Russell normally leads the other indicators. So wherever that goes, that's more than likely where everything else is going to follow. So pay attention to that. In the sectors here, we had utilities that was up slightly, 0.96%. Utilities is a flight to safety. When investors get a little spooked out, they start to, put some money out in utilities. Real estate was slightly up 0.02%. Everything else is bleeding in the red. But tech came, in third place here. Not too bad, negative 0.52%. Consumer staples was down slightly as well, negative 0.54%. And energy was down negative 0.79%. Industrials was down negative 0.98%. Healthcare, materials, financials, consumer discretionary, and communications were all down sub 1%. So there you go for the past week. It was a red week, as you guys can see. We had lots of volatility. Now, coming in, cranking the week up, we started off with the O virus. I got to be careful what I say out here, because I'm going to publish this on YouTube later. And you know how the regulators get to when you're saying words, the algorithms are picking them up and they start to ban you. Some of my contemporaries out there, I've seen them, they're getting banned for saying stuff, and the channels is getting crazy. But that's why, I've already had this vision that Wallstreet Jackboyz wouldn't bow to nobody. We got our own platform. We can host and do everything that we need to do. But, so many people are plugged into the matrix. So we still want to get it out there to you guys. It's on the YouTube, Facebook, or whatever. But we would just never, be subject to them. If they want to kick us off or ban us, we don't need them. We got our own platform. We can host the whole video. We can do everything on our website, WallstreetJackboyz.com. So if you haven't subscribed, make sure you come to WallstreetJackboyz.com. Type in WallstreetJackboyz.com/register, and you can register for free. All right. But that's what we had popping off in the market, starting off with the O virus. I'm going to just call it the O variant of the Rona. This new variant got everybody shook. And the markets like to overreact, very reactionary. As soon as some, data comes out, people just moving real spooked. And the question is the market moving, prematurely? And that's just basically what I'm gathering. I think that the markets are moving prematurely, based off of, this fear factor of this O variant. The reality is that this whole, variant situation could be just like any other variant. They're claiming that it's, supposed to be more contagious, but they're not seeing signs that it's more deadly. I saw Bill Ackman was saying that this is positive for the market. That's the Wall Street golden boy. He always, if anybody know what's going on the inside, he know. And then he said this is bullish. All right. So the Wall Street golden boy is like, nah, this ain't nothing to worry about, because you don't see anything that looks worrisome. But the news and the media like to have people to feel scared and got you scared to go out the house and everything. Got you wearing your mask on. You got 3-4 shots in your body, and you still scared because that's what the news do. So that's what the news is scaring everybody with this whole variant. But we don't have so many other variants, and this thing is probably likely to play out the same way that the flu plays out. Every year they have new variants. That's why they try to push you to get flu shots every year. Just understand that that's likely the reality of this whole, upper respiratory virus, which we call the Rona. that's likely the scenario. And so all the lockdowns and things like that are totally unnecessary. Humans can manage the risk themselves, don't need a government to be the parent. This is not China. This is America. You need freedom. It's your health, your responsibility. If you want to go out there, take risks and die, that's your fault. It's not the government, responsibility to save you from killing yourself. Maybe you want to kill yourself. You should have the right to do so if that's what you want to do. All right. But most people got common sense to say, hey, I'm not going to put myself in that kind of danger. And so, that's your responsibility. You feel me? The government can't save you, only you. So, but anyhow, the markets, coughing up, blood, like, oh, this is about to be over. We're going back on lockdown. So, President Biden had to come through, drop a speech, let everybody know he has no intent on taking us back to lockdown. He don't want to put it back on lockdown. The economy won't survive. I have a few clients down in Florida, and, a lot of people from Florida, they're not even from there, right? But it was interesting talking to the people down there because, if you see how the governor's been moving down in Florida, if you've been to Florida, then you'll understand how their entire economy is dependent on people traveling there. All right. If people can't travel to Florida, it's toast. It's done. All right. And so you can quite understand why, Governor Sanchez is, he's not with, locking down his people because, you won't survive down there. You won't have an economy. People just be starving to death. It'd be crazy. So you can't be locking everything down. Biden, he knows this. He don't want to have to do that. Or at least that's what he's saying. But, he said a lot of stuff in turn, like he said he wasn't going to do mandates and all this, a year later, look at it, less than a year later, got you on lockdown. You're going to lose your job if you don't do this, that, the third. So it turned into a straight tyrant. So it's no telling what these central planners are going to do. We just understand their objective is always control. So I wouldn't put it past them. But anyway, the markets is, getting spooked out over this whole situation. But Biden came through. He had a whole sales pitch for the big pharmaceutical companies. He's letting everybody know, Pfizer, Moderna, and all these guys, they make the best vaccines in the whole world. And, trust in the vaccines. In fact, trust is so good, you're going to get your kids shot up, boosted up, get your kids, your dogs, your wife, everybody get shot up. All right. Get the boosters as much as you need. It's free. That's what he says. So he came out, some crowd control, letting everybody know that you can get these vaccines and you're going to be good. So, that could be the case, as far as if it's the vaccine that's going to save you, I doubt it. But, whatever the narrative is, I don't think this old variant is going to be as bad as they say it is. But we'll have to see how it plays out. OK, now, it doesn't mean that we won't see cases starting to spike up because, again, these upper respiratory viruses got these seasonalities about themselves, like you observe the flu and you observe the pneumonia and the common cold. They have these cycles that they continuously go through, every year. And so who knows if we're going into another cycle coming in January or February, the winter cycle for, the Rona, where we're starting to see cases spike up again. So we got to make these investment and trading decisions based on limited knowledge. Some people going to win. Some people are not going to win. It doesn't matter if they got a PhD or if they're running a hedge fund. Hedge funds, they blow up funds all through the year. I mean, you hear about it all the time if you pay attention. So, don't doubt yourself. But just understand we're trying to use this information, synthesize it into something that we can, find an edge and make some money in the markets. So that's what the markets is trying to do now. A lot of confusion. The markets is trying to figure out, hey, is the government going to shut down? I mean, is they going to, are they going to shut down the economy or are they going to leave it open, right? Will the vaccines be enough to help? Right now, what I'm expecting is more volatility as we enter into the end of the year here, the month of December right now, have at the end of the year. So I think we're going to see a lot more volatility and, just got to manage your risk. Don't do a whole lot of extra trading if it's not necessary, though. And this is going to be a lot of learning moments out there right now coming into this time of the year. All right. On top of that news, we started the week out with the founder of Twitter, Mr. Jack Dorsey. They claimed that he resigned. I think he was probably, ousted. They pushed him out like they did before. Seen the Elliott Management Company was talking a whole lot. They've been trying to get him out because, Jack Dorsey, man, he doing a whole lot. You feel me? Like, this guy's a jack of all trades. He's doing a lot of things. He's not just doing Twitter, but, they want somebody who can be solely, working for Twitter. Okay. Jack Dorsey got a lot of stuff going on. You guys don't remember last year he moved to Africa, In fact, he the guy who actually helped Kanye West out when Kanye, you remember Kanye was going broke and everything. He's a billionaire now, but he was trying to get some money, from Zuckerberg, and Zuck wouldn't give him the money. Well, Jack, Jack helped him out. So Jack is a good friend of Ye. But Jack has been pursuing this whole cryptocurrency situation. I think he's really passionate about it. Yeah, thanks, Topaz. Yeah, he's running Square as well. But he has a lot of insights of what he's seeing. You're talking about a guy who has access to pretty much all the data in the world, more data than the government probably with Twitter, since everybody's plugged into his matrix, which is Twitter. He can see what everybody's doing and everything is doing. And so this guy is the guy who's calling for hyperinflation. He's saying that we are already in hyperinflation. And so he's really committed to this. So even though he's not running Twitter anymore, we're definitely going to keep an eye on, things that he has to say. Just because somebody says something doesn't make it real. But you'll be a fool if you ignore what he has to say. I don't have to agree with it, but I'm not going to ignore what he has to say from what he's seeing, in other countries around the world and stuff like that. So there we go. Terry dropped the article. Job growth disappoints in November despite high hopes. So shout out to Terry coming through all the time. But here we go right here. This was the actual report right here. So non-farm payrolls increased by 210,000 in November. Okay. All right. This is before the recession hit, boom, got the recession. So the goal has been to try to get back to this spot. All right. So if you draw this line right across here, that's where they're trying to get. And we've been coming up, but kind of tapering off sideways, not quite getting back up to pre-pandemic levels. And this is the stuff that the feds, they're watching and, monitoring, and they have their goals. That's what they're trying to do. So when this stuff comes out, they're looking for us to continue to increase to get back to that zone. The question is, they don't know if we can get back to that zone. A lot of experts, these economists, they're speculating, and they don't have the answers. Actually, they're dumbfounded. Some of the brightest guys in the world, they're talking about this labor force participation. You guys probably hear a lot about it in the headlines and stuff like that. It's about, people that want to work and they're trying to, participate in the market. But you got to have them actually working. But prime age labor force participation is from the age of 25 to 54, I believe. So you're in your prime working age when you're 25 to 54. Okay. So they're talking about the issue that they are seeing is that, but since July, they were expecting those people to start coming into the workplace, getting jobs, right? So there are lots of jobs available. They want those people to get those jobs, but instead it's been tapering off, going sideways. And that's not what they were expecting. They were expecting the unemployment benefits to run out to force people to go back and participate in the labor force, but they're not doing so. And so the bright geniuses out here, they put a statement out talking about 50% of the reason of why people are not, participating in the labor force anymore, because that's the only thing that they can account for, is what they're saying, is the lack of child care. And this is the geniuses, okay? The PhDs and all of that. So their thought process is that, well, child care is a problem. People can't get care for their children, so they're choosing not to work. So this is the narrative. 50% of the narrative. The other 50%, they say they actually don't know. They're trying to figure out why people are not going to work. That's the same thing I want to know too. It's a very interesting situation. When people are broke, people are starving, they get hungry, they start to kill, rob, and steal, okay? They do not want to have that at any cost. And so they just do whatever they can try to keep people working. And no matter what, they don't care, right? And so that's why they run these inflationary policies. But at the same time, they're thinking they're helping people. They're actually hurting people, because inflation it hurts the poor. And so the same people that you're trying to help, you're actually hurting. And then you're actually benefiting the people that you are painting to be the enemy, which is the rich and the corporations, because they become more rich and wealthy every time you do something. That's what happens every time the government intervenes. They make the rich richer and the poor poorer, and then things get really bad. Okay, and then you can possibly go into a civil war type situation or some type of revolution, and so these are some of the forecasts that's on the rise right now. But so the feds, they have this, this target to keep, unemployment under this threshold, keep unemployment, beyond this threshold, so they don't implode the society itself, right? So that's why they have these mandates. And so they're operating, this is all about numbers. But the thing that they don't know is how will humans behave. Human action, people are not freaking numbers. This is the problem. You can't become too dependent on statistics because numbers don't mean nothing. And humans don't always act rational, okay? Humans have the ability to do things that no other animal can do, okay? You got two dogs. You got a fat dog, you got a skinny dog. You drop a piece of meat in front of them, they are going to eat it. Doesn't matter, it's instinctual. If you do the same thing with humans, and let's say it's Reese and Topaz, okay? Reese and Topaz in there, and they're sitting down, but someone that is very astute, like Warren Buffett, is in the same room with Topaz and Reese, okay? Obviously, they're going to want to impress them. They're not going to, try to look like freaking animals, you know what I'm saying? The homeless person that's there, and they're freaking starving. They haven't eaten all day, right? But they don't want to look like they're a greedy person. They're going to eat their food in front of this homeless guy and don't share with him, right? So they're probably going to share with the guy anyway, and, you're still not satisfied. Humans have the ability to do that type of stuff, okay? And so because humans are not robots, that's another risk factor for the markets. The markets is trying to anticipate how humans are going to behave when XYZ happens, or when the feds do this, or when the government do this. Nobody knows. Not all humans think alike. And it's crazy because people try to put people in categories like, and we do aggregate and data like white people, black people, Mexican people, whatever. And the problem is that not all black people think the same, okay? So you can't possibly think you're going to put some watermelon out and everybody black is going to eat the watermelon and white people are not going to do it. Like, you're going to see some people like watermelon, some people don't. Don't matter about your skin color, right? So anyway, it's just dumb stuff that, again, we put way too much faith and hope into these numbers, and it doesn't mean anything is true. But, we're still making moves off the numbers, and the market is guilty of it every single time. So anyhow, these job numbers were important because the market is also anticipating the feds to taper the rates, right? They're expecting to taper, right? And raise rates. If you have hot jobs come out or low jobs, this is what the market is trying to figure out. But this number came out disappointing. So the markets is back in the confusion state of mind. The consensus in the market is that the Fed is going to continue to go forth with tapering. This is what the markets are believing, because Powell came out this week and he, if y'all saw the interview, Powell says, time to retire the word transitory. All right. It's time that we retire this word transitory. He's been throwing it away. He's been abusing it. Right. Nobody's ever heard of transitory until this year. And this is their way of lying to the markets. And again, belief is a powerful drug. The markets are believing that inflation was transitory. Since the beginning of this year, you guys can go back at every game plan Sunday from the top of this year. And I was calling the whole inflationary situation, and they were denying it. And now you guys see the truth. Who were telling the truth? Myself, other people out there. There's a lot of guys that's out there on the YouTube that's out here doing the homework, doing the research, telling the truth. And again, the government, here we go again, lied. All right. So now he's talking about, it's time to retire this whole transitory situation. And he got the other presidents on the board. They're like, yo, it's time to tighten this thing up. And so, the market's spooked by all of this stuff. That's why we had to sell off, right? Because they are supposed to be tapering off, cutting, their mortgage-backed securities and treasuries that they've been buying, okay, by $15 billion every month. It's not that they're not going to be buying these things anymore. They're just reducing the amount that they buy, right? And I think it's like 120 billion they buy every month to try to keep the economy going. Yet you hear them talking about the economy so strong. Well, if the economy is so strong, why are you buying mortgage-backed securities and treasuries, right? If the economy is strong, you don't need the Fed to do that, okay? So when they keep talking about it strong, it's stupid. It don't even make any sense. But anyhow, because inflation has gone way beyond their target, and they have this 2% threshold for this inflation target that they've been trying to get. And the data that they go by, right, the CPI and the PCE, these are the things that they go by with tracking inflation, is actually understating where inflation really is, all right? So they have this target of 2%. And you remember Powell was saying we got to run it above it a little bit so that over time it's going to average down to the 2%. So their intent was to blow it beyond 2%. But now you're sitting at 6% on the CPI, which is the number that they track. which is, a disputable number by many, economists that don't actually believe that number is true or even close to true. I think it's way off because they manipulated the number itself. I think back in the 70s, actually, they changed the way that they actually calculate this stuff. But anyway, the numbers don't make nothing real. But that's what they're, using to guide. But us in the real society, we know the cost of every damn thing is crazy high. Okay, but they're saying, oh, it's not a problem. It's this, that, and the third. So their whole intent was to create inflation, to raise the prices on everybody. Remember, inflation hurts the poor, not the rich. The rich they're good, right? Their assets are going to pay for whatever they got out there, right? But not the poor. The poor gets hurt. And so they went above the target, but they blew past that target. They're over 6%. But the real number is probably over 10% where inflation is really at. Okay. So now that it's so hot, they're saying, no, well, now we have to, expedite our plans to taper, right? So they're supposed to be finishing this, this program of, buying these bonds by June of 2022, right? And so they have to actually, clear this balance sheet before they can start raising the rates. Powell came out this week saying that they may have to actually, clear this out before that time. And so they're talking about somewhere around March. So again, the market is not happy about it because that means it's got to come faster. And the Fed Watch tool, where you can see into the future, you can see, what they are, projecting, okay, with, in probabilities. And so you can see all the meetings that's coming up in the future. And you guys can see here at June 15, the highest number here is the 45, okay, 45.5. So this is actually indicating a rate hike because you guys can see it slides from here to this direction. All right. So they're expecting this rate hike to come in, June 15. OK. And they're expecting, all these rate hikes, as you can see, the later part of 2022. OK. And then you can see how it goes up right here around November. So they're expecting the Feds. And again, it doesn't mean that's what's going to happen, but this is what they're expecting the Feds to be, raising the rates, at least by June of next year. But the Feds are going to have to clear out this balance sheet before they even do all of that. But now they are thinking the Feds are they're thinking Powell is going to get more hawkish and actually, beat this deadline and raise the rates. Let's see. We got earnings from Topaz just posted in here. Let's take a look at this real quick. Monday is going to be pretty light. Tuesday, we got AutoZone. Let's see. We got AutoZone. We got Wiley, Alico. Okay. I don't like those other names. Wednesday, we got GameStop. That's going to be big. People are going to be paying attention to that. Restoration Hardware. Who else? Yeah, we have Weber. Man, you get your grill on? What? Got to get you one of those Webers. Udemy, I didn't even know they was actually publicly traded. That's interesting. I want to see what they're talking about. Costco on Thursday, Chewy, Hormel Foods, Oracle's going to be big. So it looks like we're going to get some. Okay, so in the middle of the week, Wednesday and Thursday is going to be pretty good. And also, I failed to mention to you guys, Granddaddy Dalio. Ray Dalio dropped, a new. Let me get it real quick. He dropped this new book, and I wanted to actually show you guys that because, I've been studying his work for quite some time. But this book here called The Changing World Order. The Changing World Order is this book here that just came out. And I'm going to be diving into some deep studies on this. It's not going to be overnight. It's going to take some time. But it just came out. We've been waiting over a year for this book. And although I don't agree with everything that Granddaddy Dalio has to say, his research, he approached things from the point of view of more of a historicist. And so, he's went back, over 500 years and literally had his team at Bridgewater, which is the largest hedge fund in the world, to recreate these periods of times in history and set him up so that he can trade during those times and what he learned about the environment. And how to navigate through those things is what helped him to be successful as a hedge fund manager. And so I'm excited that the book came out, So again, you guys want to catch up on some of that knowledge with me, you're more than likely, you're more than welcome to do so. The book it's not even expensive. Like some of my other, economic studies are expensive, but this one was actually, I think, like 20 something bucks. So it's definitely worth the investment. And most trading sites don't teach people, anything about economics. You're just learning about, trading. And he actually talks about that in his book, how as a trader, when he was younger, how he messed up his whole fund because he didn't understand the economics. And if he understood the economics, he wouldn't have blew up his fund, basically. So that's why he took this time to learn all these things, and it helps them to navigate through the times, like time in the markets. Now, we got a class that's on the website called Time in the Markets, which is actually free when you guys, subscribe, and you actually get the premium course. You get the Time in the Markets course, which is full of resources that you're not going to get at these other trading sites. I teach you about inflation, teach you about interest rates. I teach you about bonds. I teach you about everything. Okay. And it was 2 hours of material on that. Really great webinar that's still on there. So make sure you guys check that out. All right. So with that being said, let's take a look at these charts here. All right. So taking a look at the charts. All right. Looking at the S&P 500 here, and let me switch to yellow. All right. Okay. We got that top high, and it finally broke. Okay. It got rejected. We got that sell cue right there. That sell arrow said, boop, sell. Next thing you know, price is now trading under the moving average. Okay. So price is going south. What we're expecting to look for in the market itself is for price to stabilize here on the daily chart. If you're looking at the daily chart, looking for price to stabilize on this 100 moving average right here. So I'm just looking for price to stabilize around here. Not expecting no crazy, wild, big moves, but it'd be healthy to see the market stabilize at this 100 moving average right here. As you guys can see back here, we had that inverse head and shoulders that formed off the 100 moving average. Okay, came, tested, boom. Oh, excuse me. Came, tested, boom. Came, tested, boom. Came, tested, bounce, ripped. All right. To the 161 extension. Now we're back at that same line, okay? And that line is looking like this. So, all right. But as we can see on the RSI side, that it's going into the oversold territory. So normally you get into the oversold territory, it may chop, and that will give us a firm floor. We know that the floor has been established at this level. Right now, it's not quite there yet. They're still trying to hug that 50 right here and not quite test the 100 yet. And so, we'll have to see how this is going to play out in this week. And I think that we can get a print this week, at least in the next 2 weeks, to let us know, if this is going to be the support zone that we should be paying attention to. We'll expect some dip buying to take place at the 100. Okay. So I think we're gonna get some dip buying here. It doesn't actually mean it's gonna hold. This can turn into a bear flag quite easy. Okay. Get people caught in a trap, boom, and you can sell right on off. So don't get too crazy. Not right now, not at the end of the year. And going into the end of the year, man, liquidity is gonna dry up. People will start to take on vacations and stuff like that. So I'm not expecting nothing crazy here. Okay. The pink line is a 61.8 retracement there, Topaz. Yeah, that's down here. Okay. Yeah. That's the 618. And then I still got the JP Morgan target here that their outlook for 2021 is expecting. All right. And let's move to the NASDAQ here. You see it looks like a shoulder here. It's kind of looking like a shoulder, looking like a head right there. Okay. Either way, you took the Fibonacci here from swing from this high to this low, and we got these extensions here, and we scratch in between those extensions. The Fibonacci held through, so that's how we knew the Fibonacci was worth something. The price behaved towards the Fibonacci. We got that rejection. When we got that rejection, we got that sell trigger right there. Same way we got this sell trigger back here. We got that sell trigger right there. Price is now trading under the 8 moving average. Okay, so as price is trading, downward. It's going to be important that the NASDAQ hold that 100 zone, same level right here. It's important that it holds the zone here. So we got to squeeze. It looked like a short squeeze that's firing short here. So there's a squeeze that's firing short. You guys know the squeeze, sometimes it fires long, sometimes it fires short. Okay. If we take a look in the past, this right here is an example when the squeeze fired short. Okay, we had a squeeze right here. And then when it turned red down there, that was a squeeze firing short. All right, boom, fire short. So take a look at the Russell here. This is one that was really tricky. I was trying to time this, was it last month or 2 months ago? I know it was an extended, sideways action here. Perfect environment for an iron condor strategy if you're trading options, because, iron condors, you're going to make money if it goes sideways. That's the beauty about trading options. You can make money if the stocks go up, down, or sideways. It doesn't matter. But we saw it squeezing, caught the squeeze here, and it was rejected immediately. It's been selling off ever since. And this is not in good territory. Now, it is overbought, oversold. And so we could see it to start to, to retrace here a bit. And just even off the 236, we can see this zone here. Still, this is also true. It's a weak zone, but it's holding this weak zone here. But it's breaking down, as you guys can see. It's trading under all of its key moving averages. Okay, you see the 200, the 100, the 50, the 20. Its price is trading under all of those. So that is bearish. That is not positive. Now, typically, we see the Russell leads the rest of the indicators. So wherever that goes, you don't see that. But we've been having a pretty chaotic market, since the pandemic. There's no real price discovery and stuff like that. So it doesn't mean everything else is going to follow suit. But that's what typically happens. And so I'm expecting the same thing. You feel me? Topaz says it took the damn window. Right. Yeah. So no bueno for that one. All right. That was not good. Now, another interesting development I know we was tracking in the chat room on the website was Alibaba. Baba has been, getting the Michael Myers here. Super clap. It's a great company. They're going to be around. They're going to do their thing. But you got a lot of, issues with China, President Xi Jinping, how he's moving right now. He's trying to get his companies out of the U.S. stock market, right? All of this beef started with Trump, and Biden isn't being any different, So when they're aggressive like that, it looks like President Xi is actually maneuvering in ways to, bring his companies back home. So no more, raising money from the U.S. stock market, which is a bad thing for investors, who want to be able to, to participate in these names. But Alibaba is one of those names. You guys can see, since all of this uncertainty about China and what they're doing, it got, called down here, fell to the 618, and then it chopped, and it's been breaking down all the way down. Okay. We got these zones in here, prices underneath these zones in here. So the next levels that I got in here, the 1618 is around $78, if you will, $75, if you will. And then the low is like $57. Now, it'd be crazy if this thing trades down here. Doesn't mean that you'll be able to participate in it, because if they delist it, then, can't nobody get off, get none of that. So anyway, China is not the place that you want to be in Chinese stocks right now, because the way the government is doing, nobody knows what's going to happen with that, and it's not looking good. But yeah, China got smacked all the way up. And I had to go back to a 20-year chart so you guys can see all of this, movement in here. So you want to be able to zoom out so you can get the broader levels, okay, and then you zoom into the smaller time frames and see how the price action is matching up with those things when you're doing your technical analysis. So in this case, to get a full view, I had to go back 20 years to really see how this thing has been moving, where it's going. Okay. But yeah, you don't want to be in that. And you remember Charlie Munger was buying this stock a couple months ago, and that's when everybody was buying the dip. Everybody was buying the dip because, Uncle Charlie Munger was buying up. And so people was falling in. And, if he's smart and, he is super smart, he's probably already out. So, yeah, you don't want to be following people blindly, though. So make sure you understand what you get yourself into. So anyway, that's the development that's happening on the Chinese side here. Oil got clapped as well. Okay. Oil is trading really low. And the news that came out with Biden trying to increase, or do more output for U.S. oil producers, didn't actually really have too big of an impact on the oil markets. What really had the biggest impact was this whole Omicron virus situation, okay? So, and the reason why is because the market is afraid that, governments are going to go back on lockdown. So if governments around the world put their nations on lockdown, that means there's going to be less, transport. So there's going to be less demand for oil. Okay. So all of that is what we're seeing in here, which is a blessing for Biden because, people have been giving him hell, dropping memes at the gas stations. When you pump gas, you see a little picture that's right there, a little sticker. And he's got Joe Biden all happy saying that he did that. And because the prices has been so high, crazy high prices. But, they created a miracle, which is called the O variant to the Rona, to get these prices down. And so the prices are really cheap, on this right here, as far as investors is concerned. But it is oversold. Okay. So this is oversold territory. And I left my Goldman Sachs target in here, which this is the gold line right here. This Goldman Sachs target I left in here. And you can see how well, when it fell down, it actually came down to that same target. I'm just expecting this to bounce to chopping sideways. I don't think we'll get more downward action. I think it's already oversold. The move is exaggerated. I'm expecting this thing to kind of bounce back a little sideways to bouncing, but we'll have to, see how that plays out. Okay. Terry said they needed to get clapped. Yeah, they most certainly did need to get clapped. We definitely need to get those gas prices down some. Definitely get these gas prices down some. Just so you guys can see the bond markets. Again, everybody's trying to figure out what in the hell is going on. But we saw the bond yields come down. Okay. And so when bond yields come down, I mean, people are buying bonds. So the bond prices are going up. The yields play an inverse. So the yields coming down here. Pay attention to these yields. These yields are lower, but they're still, off the highs that we had. They're still higher than the lows that we had back in was it July? So those interest rates that came down. The yields came down here. The bond yields came down here, and they've been going up ever since. And so you still got that uptrend. That uptrend still hasn't broken yet, and so I'll be paying attention to that as well to see if it, further breaks down or if it starts to solidify and then go back up higher. We'll pay attention to that as well. So definitely want to check that out. I was looking at some consumer staple stocks like Pepsi, their own consumer staple stocks. So any plays, you guys may want to pay attention to those here. But that's pretty much what I'm looking at. And in the chat room on the website, you guys can definitely, get with the crew. All right. And then you guys can actually converse, and exchange trading ideas right here in the chat room. Chat room is free for all members. Most places you got, they charge them $200-$300 a month for this type of service. But we have it free for you guys. So you can jump in the chat room 24/7. It's free. And I'm in there. Lots of other people that's in there, working out their trades and stuff like that. And it's good to be able to communicate with other traders, other people, get some ideas, but just jump in. You access the chat room itself when you're on the news feed, which is right here. Okay. So you can see the news feed is right there. You can access it there, and you can access it from the side panel. So you have a side panel. You can access this as well. Right there, your news feed, and you'll see the little bubble on the bottom there. But yeah, definitely want to encourage you guys to jump in there. I try to be there as much as possible, but even when I'm not there, other people are there as well. But yeah, definitely make sure you tell a friend to come join us out here. Definitely make sure to check us out. And if you're on the YouTube, I'm not a YouTuber, but we do publish this on YouTube later. Make sure you guys like and comment so that we can get the algorithms to produce, the video to other people so they can see it. It's all a numbers game at the end of the day. So it doesn't actually really matter what you put in there. Just the algo doesn't know what you're putting in there either. The algos just know it's activity. They just need to see the videos, got some activity. And when they see it, they're going to show it to other people. So make sure you guys, check out the video afterwards. If you don't leave a comment, just at least like it so we can get those hits to produce those higher volumes. But again, looking for more slowdown at the end of this year here. Even myself, you guys got to start doing your tax planning and stuff like that coming into next year. So, don't get too antsy and try to trade every rip in the market. So you're going to mess around and get your head chopped off. It's really volatile right now. And so we'll be paying attention and keep you guys updated. But I appreciate you guys being there with me. And man, you guys enjoy the rest of your weekend. Thank you. Have a good one. Peace.